Hey guys, my name is Fyzee and this video is going to be a short overview of ASX VTS. Before we get into it, this video is not financial advice. I'm not a financial advisor. We are speaking in a very general sense only. I just have a passion for finance and investing, same as you. So welcome to the channel. Let's get into it. Now, VTS stands for Vanguard US Total Market Shares Index. And the great thing about this ETF and why it's so unique is that it tracks nearly 100% of the US market. So it's very diversified to say the least. Now, recently I've made a video about ASX IVV. That ETF tracks the S&P 500 and that ETF is less diversified than this one. Now, personally, I don't invest in VTS, but I invest in IVV instead. Now, some key facts about this ETF. So the fund size is $2.11 billion. It's domiciled in the United States. And the fund inception, which is basically how long the fund has been running for, is since May 2009, which is over 2 decades old, which is definitely good to see. Now, looking at the management fees, they are 0.03%, just the way that I like it because they're super low in true Vanguard fashion. And the fees basically reflect what Vanguard is all about, which is giving low cost access to investors. Now, again, if we compare these fees to IVV, they charge about 0.04%. So this ETF is a very tiny bit cheaper. And the fee for VTS turns out to be $3 per $10,000 invested per year. So it's very, very low, very negligible. And here we've got the NAV, which is the net asset value, which is currently at about $204. Now, as with nearly all ETFs, the reason why you would buy this is to hold it for the long term. And generally speaking, your investment should go up over time with the market. And this ETF will give you exposure to some of the biggest tech companies in the world like Apple, Google, Microsoft, Amazon, Tesla, and so on. So how has this fund performed so far? Let's have a look at it. So here we can see that the 1 month return is somewhere around 0.36%. So it's slowly trying to get back up to its previous levels. Looking at the 6 month return, it is somewhere around 13%, which is quite healthy. And the 1 year return is going to be pretty good as well at about 27%. Now, one very important thing to note is that 1 year ago, we had the crash in March, which means that the returns for nearly all ETFs and all other stocks are going to be quite high because that was the recovery period. But looking at the 5-year returns for this ETF, it is somewhere around 95%, which is quite solid. Now, once again, these returns are pretty good, but let's look at the compounded annual growth rate of this ETF, which is the compounded annual return that you would have received if you invested in this ETF every single year. So this is the calculator that I use, which is quite helpful. So let's input some figures in here. So 5 years ago, the value of the ETF was 135.70. So I'll just quickly put that in. And the end value is the current value at the moment, which is 264.92. So let's just put that in. And this graph is tracking the 5 years. So we're going to put 5 here. And let's have a look at the return. So the return per year, the compounded return per year, it's 14.32%, which is just phenomenal. Now, once again, I say this in every video, which is that these returns are not guaranteed in any way, shape or form, but generally speaking, the market does tend to trend upwards. And this return right here is higher than the normal market average, so we can't really expect this return to be ongoing. Now, guys, if you want to get started with investing, I've left some affiliate links in my description, so go have a look and you can get some free trades and some free stocks as well. Now, looking at the portfolio characteristics for this ETF, and the number one thing that jumps out to me is the number of holdings, which is a massive 3,640. So obviously you can see why this ETF is more diversified than others. And we can see some ratios here, like the equity yield is right now at about 1.45%. The PE ratio is 27.7 and the price to book ratio is 3.76 and so on. Now, the sector allocation is quite interesting because if you didn't know already, the US is heavily geared towards technology because they have some of the big names like Facebook, Google, Amazon, Apple, as we spoke about earlier. And the allocations are about 26.6% towards technology. Then you've got consumer at about 16.7%, healthcare, industrial, financials, and so on, with the lowest being basic materials. So looking at the region and market allocation is obviously geared towards the US, so 100% of the fund's allocations are in America. So if you're based in Australia, this ETF may form part of your diversification strategy. Now, looking at the holdings, we've got some pretty big names like Apple at about 5.2% allocation, Microsoft at 4.55%, Amazon, Facebook, Tesla, and so on. And you can see that most of these first few allocations are based around technology, and this is a similar theme that we discussed in the ASX IVV ETF. Now, if you guys scroll down on this website, you can click this link over here and you can see the overall holdings for each little stock. And once you click on it, this is the spreadsheet you will get with basically every company that's in here. And you can see that some of the smaller companies have super low ratings, like this one, which is 0.00001%, which is just insane, but it still allows you to capture all of these small cap companies. Now let's have a look at the distribution frequency, which for this ETF is paid quarterly, which means that you will get a quarterly dividend. So this is quite good for us Australians because usually we get a semi-annual dividend, meaning that we get paid twice a year. But with this ETF, you will get paid 4 times a year. Now, when it comes to ETFs, you might want to diversify in the Australian and the US markets, but there is one market that you can't ignore, and that's Asia. This video compares the top 4 Asian ETFs that you might want to consider, as China is expected to surpass the US by as soon as 2028. And this video speaks about ASX IVV, which tracks the S&P 500, which we spoke about in this video quite a lot. Thanks for watching, guys. I'll see you in the next one. Bye now. So looking at the regional